Good morning, everyone. Welcome to day 4, part 4 of our September webinar series, which is about getting ahead of your China numbers. The goal of this webinar series is really to give people an education on what they need to think about in terms of profit repatriation, tax planning, financial resources, financing options, understanding the whole arena around VAT. And then obviously with COVID being the way it is and not being able to travel to China, how to physically operate your bank account. The goal for me in regards to all of this is giving people an understanding of not feeling overwhelmed, but giving clarity and transparency in terms of how to analyze your numbers and how to figure out how things actually work in the Chinese market when you're talking about accounting, tax, profit repatriation, and banking. Before we start today's session, there's not so many people online today, but I would like to understand who is in my audience and who are watching my videos. So if you could just type into the chat box, or if you're watching us on replay, type it into the comments section. Who are you? Are you a newbie? Are you a startup? Are you an experienced China hand? This just allows me to give an understanding around the audience and what level of knowledge you may or you may not have. How the webinar works is I'm here to educate you. I'm here to answer all of your questions around VAT and the golden tax system. And hopefully I will be able to give you clarity and transparency about the VAT world in China after today's presentation. Please use this time wisely. It's your time spent, so don't feel shy to ask away. You can type in the chat box. As soon as you've got questions, start typing them in, because it'll be first come, first serve when we hit the Q&A. From a technical standpoint, we're using Zoom meeting. So if you run into any technical issues, just log off, log back on, see if that works. Just know we are recording today's session, so worst case, you can look up the recording on our YouTube channel by the end of today. If I run into any issues, which may not happen, it does take me about a minute to a minute and a half to reboot the system, and I will be coming back on to finish today's presentation. So obviously, if you've got time restrictions, then by all means log off, look at the recording later on. Just know I will be answering all the questions. So if you've got questions, comments, include them into the chat box. And just a reminder, so the previous 3 sessions from Monday, Tuesday, and Wednesday are already up on our YouTube channel. You can take a look at those recordings. Monday was about how to get your profits out of China, what kind of strategies to implement. Tuesday, we were talking about financing options, what options are available, and how to calculate your registered capital. And then yesterday, we were talking about, and now I've lost my memory. What were we talking about? Tax planning. So we were talking about all the different types of profits tax options and how to think about tax planning and what will be the tax rates in the future in China. All right. Again, those are up on the YouTube channel. Today we're doing VAT. Tomorrow we're going to be talking about operating the bank accounts out of China. And if you are an operator and you don't have the ability to go to China, what are you doing? How are you operating those accounts as well? You can register up on woodburnglobal.com/events to register for any of the outstanding events that are coming up. Now, a little introduction for me. There have been no guest speakers on this week. It's just been myself. But to introduce who I am, my name's Christina Kohler-Kalucha. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert on inbound investment into China. That just means that 100% of my clients are foreign investors investing into the Hong Kong and Chinese market. I've got 17 years of on-the-ground experience in Shanghai, specifically in corporate services and corporate compliance. Just as a note, due to COVID, I'm currently in Europe, first time ever living in Europe, definitely an eye-opener, but I am currently not in China. So I'm doing remote working, but my team is all sitting and is based there. I've helped over 500 companies, their investment advisory, their planning, their strategy development, followed by their implementation into the Chinese market. And an aspect that I truly love is helping the client scale up and grow, not just by analyzing the numbers, but analyzing the business in its entirety to know where issues could be arising, where there's not enough resources placed, etc. One of the beauties of China after 17 years of being there is that I've been able to create SOPs for a lot of the administrative and compliance functions that need to occur in China. And so I've developed webinar presentations on these SOPs, these methodologies, and I've given you a brief list there of some of them, but you can definitely go up on our YouTube channel and look at those recordings and get more information on that. So to start today's presentation, today's part 4, how does the value added tax work in China and what is the golden tax system? All right, so what is the golden tax system? The golden tax system is the VAT, the value added tax system in China. What does this mean? This means that in China, you are required to purchase software, VAT software. You are required to purchase official VAT invoices to be able to operate, and a printer, sorry, apologies. You're also required to purchase a VAT printer to be able to operate the VAT system in China. So what does that mean? It means you download this VAT software, you do all of your input into the software, which ultimately then calculates your VAT liability month to month, and it's connected with the tax bureau. You've got your VAT invoices, which in Chinese are called Fapiaos, which you physically purchase at the tax bureaus. You connect the printer with the software, and when you want to issue VAT invoices, you put them in the printer and the system generates the content that goes on to that invoice. That is the golden tax system. All right. Now, why is it golden? Because the Fapiaos, the VAT invoices, are of high value. And there is a black market for this in China. As a result, there are also specifications provided by the tax bureau on how and where you keep your Fapiaos, how you maintain them, and who is in control of them. And we're going to be talking about all of that today. All right. But that's just to summarize what the golden tax system is. It's everything pertaining to VAT. So very briefly, and a lot of this will be common sense, but VAT is a sales tax in China. It is one of the major sources of tax revenue to the Chinese government. And as a consequence, they take this VAT system very, very seriously, which is why they've nicknamed it the golden tax system, because there are rigid rules and systems you have to abide by to avoid any form of tax avoidance. And what I want to highlight here is that VAT is a local sales tax. Okay, so if you are selling goods into China and that's a cross-border system, there is going to be VAT applicable. When you do domestic sales, there is going to be VAT applicable. When you provide services locally in China, there is VAT applicable. There is VAT applicable on everything. If you are reading content online where you read the word business tax was the former tax imposed on service-oriented transactions, and that has since been replaced by VAT. So business tax no longer exists. If you are reading that, eliminate that from your mind because it's no longer valid in China. So there are two different types of statuses in relation to VAT, which basically means when you establish a company in China, you can choose to be a general VAT taxpayer or to be a small scale GVAT taxpayer. All right. Now, a general VAT taxpayer has the advantage of being able to reclaim or offset the VAT on purchases, sales of goods, and modern services. A small scale GVAT taxpayer cannot reclaim or offset anything on the input VAT, i.e. on purchases. Okay. There is also a differentiation between the two, but that is actually ending within Q4 of 2021. But as of right now, there is still the requirement that as a general VAT taxpayer, you pay your VAT monthly. And if you're a small scale taxpayer, you will be paying it quarterly. Come Q4 2021, there'll be a new regulation where you will pay as a general VAT taxpayer on a quarterly basis. However, your calculations still need to be filed within the software system monthly, but the actual declaration is done quarterly. Now, a definition of a general VAT taxpayer is the fact that VAT payable, which currently is monthly, is equal to the output VAT from sales minus the input VAT from purchases. So basically, what does this mean? It means that when you have your VAT software system, anytime you receive Fapiaos from your suppliers, whomever they may be, whether they're service-oriented or trade-oriented, you input those into your software system. And anytime that you issue Fapiaos to customers, you input that into the system. And basically, the software system generates your VAT payable on a monthly basis. Now, a general VAT taxpayer automatically will be issuing VAT special invoices, because VAT special invoices are the Fapiaos, the invoices that allow you to do your deductions within 180 days by the other party. Okay, so that means you receive VAT special invoices, you issue VAT special invoices, and you have the ability to do the reclamation and the offsetting of the VAT on purchases. VAT general invoices are predominantly used for small scale taxpayers. Okay, as a general VAT taxpayer, you could potentially receive VAT general invoices from suppliers that are small scale taxpayers, but you have the ability to ask for them to issue VAT special invoices. They have to just go through a special application procedure to be able to do that. The general VAT taxpayer rates are the column all the way on the right in red, and those are the rates since 2019. If you are trading in goods, then the sales of goods is at a rate, any form of goods, apart from a few that are listed here, will be at 13%. Okay. If you're providing any business support services, so that would be corporate service providers, law firms, headhunting firms, media digital agencies, you get my picture, all business supporting services, they will be charging you at 6%, as long as they are general VAT taxpayers. If you're looking at transport services, it's 9%, processing repair services is at 13%, logistics is at 6%, real estate is at 11%. I realized last minute that I hadn't put that in here. So for example, if you're renting a manufacturing facility, then the Fapiao that you will receive from your landlord will be at 11% for the rental amounts. All right. And as you see from the last two items, agricultural products, food and edible vegetable oils, that's all at 9%. It is important to check with your goods. I mean, if you're trading in generic goods, so things like cosmetics, fashion, consumer products, I mean, that's all going to be at 13%. Certain products will have consumption tax that's added on, like the cosmetics, but that's a different, consumption tax is a different type of tax that I had highlighted in yesterday's presentation. Now, leading on to small scale taxpayers. So again, this is all part of tax planning. When you incorporate your company in China, what we like to do for our clients is to do a tax simulation based on what their strategy is in terms of transactions. So you'll find some companies who say, you know what, for the first 2 years, my Chinese entity will just be a cost center. I'm not planning on generating any form of transaction. I'm not going to issue invoices to clients. We're going to use up the registered capital and it's just going to be a cost center. Well, in that case, I would tell you stay as a small scale taxpayer because there's no benefit to becoming a general VAT taxpayer. And as you slowly start transacting, meaning it might be a transaction every quarter, a transaction every 6 months, still remaining as a small scale taxpayer may be more beneficial to you in terms of optimizing your VAT than becoming a general VAT taxpayer. It will also depend if you are in trading, if you are in service. It depends what sector and industry you're in as well. So it is good to do these tax simulations prior to making that decision of saying, we're just going to become a general VAT taxpayer. Don't do that because you might find out that in the first 2 years, you're paying more VAT than is absolutely necessary. Okay. So we want to do that tax simulation before we're actually established to know, does it make sense to become straight away a general VAT taxpayer, or does it make sense to remain as a small scale taxpayer until we hit certain trigger points and transactional volume, where then we upgrade ourselves to becoming a general VAT taxpayer. As a small scale taxpayer, the official rate is 3%. What I want to highlight is that in COVID times right now, we are paying 1%. Okay, so they've reduced it from 3 to 1. There's no rumors, but this will be my assumption. As the economy is growing and things are improving in China, my belief is that come January 1, 2022, the rates will be going up to 3%. But don't hold me accountable for that because we have to wait for the implementation guidelines and the rules from the tax officials to see what they will say. But under COVID times, it is at 1%. Okay. Now, the disadvantage of being a small scale taxpayer is that you, in theory, can only make out VAT general invoices to your customers, which means that your customers are not able to use those invoices to do any form of VAT offsetting reclamation deduction from the sales that they're going to be doing. Okay. However, if your customer specifically says, as many of my clients do, Christina, please issue us a special VAT invoice, we have the ability to do that, but we do need to file an application with the tax officer for every transaction that requires a special VAT invoice. So there's just an inefficiency to do it, but as small scale taxpayers, we can do it. Now, in certain cities in China, we have the ability now to be able to issue special VAT invoices in-house for certain service-oriented businesses. So like mine, we can do it in-house in terms of the corporate service providing profession. For others, you would still need to go to the tax bureaus to do those forms of application. Now, as I mentioned, small scale taxpayers cannot deduct the input tax and can only use the costs to deduct the income tax payable, okay? Now, I've written there in brackets yet, because who knows how the tax regime will develop and amend itself over the next few years. It could very well be that small scale taxpayers will eventually be able to do this. The rule of thumb for me is that if you are service oriented and you're not going to be purchasing anything per se, like equipment and generally it's equipment or raw materials or supplies, then remaining as a small scale taxpayer would be more beneficial to you. If you are trading, it really will come down to your trading volume in terms of purchases and sales to understand whether small scale would be more beneficial to you or not. All right. Now, so when you set up your company in China, you actually are automatically designated as a small scale taxpayer. If you want to become a general VAT taxpayer, you go through an application to get that done. It takes 2 to 3 working days, and then you get that status. The issue is you can't go back. Once you're a general VAT taxpayer, you're a general VAT taxpayer for life. That's why I say we've got to do these tax simulations. All right. Now, if you are a small scale taxpayer and your business is scaling up and you are generating more and more revenue, then it could very well be that you get automatically upgraded into the general VAT taxpayer status. All right. But in addition to that, that's a disadvantage, but one of the advantages of being a small scale taxpayer is that if you have monthly sales of 100,000 RMB, or you have a quarterly sales volume, because for small scale taxpayers, VAT is declared on a quarterly basis. If you've got a quarterly sales volume of 300,000 RMB, you can actually be exempt from paying any form of VAT. So although you're issuing invoices with the 1% at the moment, or the 3% eventually after COVID, you still are exempt from paying VAT. So that is a big advantage, helps a lot in cash flow. Now, you've been hearing two different terms for the invoices, the Fapiaos. I've mentioned the general VAT Fapiao, and I've mentioned the special VAT Fapiao. As small scale taxpayers, the general VAT Fapiao is the official Fapiao to show evidence of payment, but you cannot use those Fapiaos for any form of deductions. Okay. Now, special VAT Fapiaos are used for tax deduction purposes, which is why they are specifically used for general VAT taxpayers. And on those invoices, there is a lot of detail that needs to be put on there that has to be 100% accurate. If one item is wrong, you have to cancel that Fapiao, reissue the Fapiaos, which can be extremely tedious. And I'll explain why a little bit later. Now, the most important thing you have to realize with Fapiaos is that a transaction has not actually been performed if a Fapiao has not been produced. Meaning you cannot book a transaction in your Chinese accounts if there is no Fapiao there. Okay? And if a customer does not, if you do not issue a Fapiao to a customer, it is considered an illegal act, as all business transactions have to be recorded through a Fapiao. This is why they call it the golden system, because these Fapiaos are considered like gold. They are truly what makes a transaction legal in China. Okay, and again, nothing can be booked in your Chinese accounts without having the Fapiaos actually there and available. Now, on a special VAT Fapiao, you need to add all of this information: the seller and the buyer's name and business address, the seller and the buyer's tax reference number, which is the TIN. You need to have the description of the goods and services. You have to have the bank account information of the buyer and the seller, the sales price in RMB, as well as the VAT calculation. And what that looks like is this. This is what a special VAT Fapiao looks like. Okay, you've got all of the information that I've just said on there. And how it is all calculated is that the buyer and seller's information is recorded into the VAT software system, which again, why it's so critical, because there can be human error when you type things in. And you will have then the invoice seal, which is one of the critical chops that you will receive when you incorporate your company, put on there as well. Now, this is an old Fapiao display, because as you will see, you'll see a 17% rate indicated. That is the old rates that were utilized. The new rate would be 13%. Okay, so I just wanted to highlight that. As you can see, this was issued in 2017. Okay, so this is what it looks like, and this is what you are purchasing from the tax bureaus to be able to issue these types of Fapiaos through your company. And mind you, this is what you're going to be receiving from any suppliers. By suppliers, it could be service providers, it could be raw material providers, whomever, logistics providers. This is what you will be receiving from them. Now, this is where it gets unbelievable how this whole system works, because it is extremely old-fashioned, very traditional, and time-consuming. All right, so how it works is when you become a general VAT taxpayer, you need to go to the tax bureau to buy your VAT Fapiaos. These VAT Fapiaos come in booklets of between 25 and 50 sheets. And when you first establish your company, you will be able only to purchase booklets where each sheet has a value of up to 10,000 renminbi. So if I go back on the previous slide, okay, the amounts here are very, very minimal. It's 59 renminbi, 59.60 renminbi. But ultimately, on this sheet, you can only place a value up to 9,999 renminbi. Okay, so what does that mean? That means if you have a customer that you're invoicing where the transactional volume is 35,000 renminbi, you will be issuing 4 sheets. One sheet, 9,999, second sheet, 9,999, third sheet, 9,999, and the remaining amount on the 4th sheet. Okay. So you can see that with your booklet of 25 to 50 sheets, it's going to dwindle quickly if you are transacting in quite high volumes, right, with your customers. Now, you can eventually apply to increase the quantity of Fapiao sheets on a monthly basis based on the recurring amount of transactions that are running through the company. Okay, meaning you can buy more booklets every single month than, because initially when you start up, you'll only be able to buy 1 booklet at a time. You will eventually be able to buy more booklets as you show proof of transactional volume and value. Okay. In addition to that, you will be able eventually to increase the limit of each Fapiao sheet from 10,000 renminbi to 100,000 only when you have reached a sales amount of 300,000 per month for 3 consecutive months. Now, I do this because it's a rule of thumb and it will depend on your tax officer in terms of what he says. Some tax officers may say less than 300,000 renminbi needs to be achieved for a period of 3 to 5 months. Some will say you have to achieve 500,000 renminbi per month for a period of 3 months. It is vital that when you are meeting with your tax officer, that you have that communication level to understand what are the requirements and limits to be upgraded to higher value Fapiao sheets. Okay. Now, if you have a special transaction that's high in value, you can actually go and apply to the State Tax Bureau for the issuance of the Fapiaos, and each Fapiao sheet will amount to 100,000 renminbi. But you need to take into account the bureaucratic procedure of doing this application. Okay, it does not happen overnight. It's not that you go to the State Tax Bureau today and you say, I want to issue now this because I have a special transaction. You have to show the evidentiary proof of the contract, the pro forma invoice, etc., to say we want to have the ability to issue the Fapiaos where each Fapiao is amounting to 100,000 RMB, but we want to issue it for the whole amount. Okay, so you do have that option to be able to do that. Now, very simply, again, to ease people's minds on how transactions actually work in China. All right. And again, the idea is that VAT payable is the output minus the input. So let's say you're doing an import transaction into China. The overseas supplier, let's say the UK supplier, is selling products to its subsidiary in China. Okay, so you have your UK supplier, he has his own subsidiary in Shanghai, and he's selling products to that subsidiary. On the importation, so once the goods have arrived and they need to clear customs, customs duty will need to be paid together with the input VAT, which is calculated on the CIF value of the product at 9 or 13%, depending on what the product is. Generally, it'll be 13% if it's generic products, 9% if it's agricultural products, vegetable oil, edible foods, right? Plus then the customs duty. And if the customer in China, the subsidiary in China, is a small scale taxpayer, then that VAT rate of 9.13% is going to be reduced to 3%. Okay. Once the Chinese subsidiary settles this payment, the goods are clearing customs. Okay, so that's an upfront out of your cash flow that you have to pay. And upon resale of the products to the end customers, the subsidiary in China will pay VAT on a monthly basis based on the VAT on the resale minus the VAT on the import. And it'll be done based on consignment. So when you imported the container, the 40-foot container, you paid the VAT and customs duty on that whole container. But obviously, when you sell to customers, you're going to do it on a consignment basis, unless you sell really wholesale and you're selling container by container. But if you're selling just on certain volumes within that container, you will be paying, obviously, the VAT on consignment basis. Okay. And again, all of this information goes into that software system because obviously you might be importing in September, but the sales don't actually occur until October, November. So maybe in September, there's no VAT payable and the payable starts being generated in October for that consignment basis, November for that consignment basis, etc. And you use the software system to track all of the Fapiaos that are being issued and all of the importation that is coming in. If you've got domestic transactions, what I want to highlight, number one here, is that for domestic transactions, that will all be done in renminbi currency. Previously, with import transactions, although it can all be done in renminbi, predominantly the overseas supplier will sell in some form of foreign currency, US dollar, sterling pounds, whatever it might be. All right. But the resale locally in China will be done in renminbi, must be done in renminbi. Domestic transactions cannot be calculated in foreign currency, must be done in renminbi. Okay, and the principle is not complex, right? VAT is paid by customers along the supply chain, and ultimately the VAT payable is the output minus the input in that month. Okay, which is why you've got the software system tracking the VAT month to month. Export transactions. So if you've got a Chinese subsidiary out of Shanghai, let's say a Shanghai subsidiary, and they're doing export from China, they are the last owner of the goods in China, and they can then apply for the VAT rebate upon exportation. There needs to be proof that the goods have physically left China or have at least gone into a bonded logistics park. Then you can apply for the VAT rebate, okay? And the VAT rebate rate is based on the HS code of the product on the original sales value. Okay, you will not get the full 100% VAT rebate on purchases. It won't happen. It'll be a percentage of that, and it will be dependent on the HS code of the product. Service transactions, very similar to domestic trade transactions. It is not a complex principle. Basically, as a service company, you are issuing invoices to your customers with a 6% VAT rate if you are a general VAT taxpayer, or a 3% rate if you're a small scale taxpayer. Service companies don't have a high amount of suppliers. I mean, they might be outsourcing some functions and therefore get VAT invoices, but that's going to be so minimal because you're not buying goods. You don't have suppliers in that regard. You're not buying equipment. So there's very little to offset, which is again why one of the reasons we say for service companies, it might be more advantageous to remain as a small scale taxpayer. I hope that is so far clear for everybody, because again, I know how complex the Fapiao and VAT system is, but I hope I've been able to give you some transparency so far. Again, if you've got questions, type them into the chat box. Okay. Now we're getting into the interesting part, which is invoicing options. When do you issue that Fapiao to your customer? Do you issue it upfront before payment, or do you issue it upon receipt of payment. Okay. And the beauty is you have these two options available to you. Okay. And there's no right or wrong here. So you might find that with certain high-level customers, they will require that you issue the VAT invoice immediately to them prior to payment. Now, what does this mean? It means that you need to rely on your payment terms to make sure you get paid from your customer on time. Because as soon as that VAT invoice has been issued, you're putting that into your VAT software system, and you will have a VAT payable in that month without actually having received payment from your customer, which ultimately means an imbalance of cash flow. So if you've got payment terms of up to 180 days and you're issuing that Fapiao to them and you're paying that VAT up front and the value of that transaction is high, that could affect your cash flow without never having been paid. Okay. The alternative is that you issue a type of pro forma invoice that you create in Word or Excel to your Chinese customer. You wait for payment. And once you receive payment, you then go ahead and issue the Fapiao. The beauty of this is the payment that you're receiving already holds the VAT amount, which means you won't have to upfront any cash because you would have received that VAT amount already from your customer. So it helps to control your cash flow. Now, as a startup in China, I would usually recommend to everybody to follow the second option, which is issue that pro forma invoice, wait for payment, and then issue the Fapiao, because in your startup period, as you would have heard in my 3 previous sessions, cash is king. Cash is needed in your startup phase. It is a balancing act to make sure that you can survive in the market, pay off all your expenses. Cash is critical. And you don't want to have any impact of paying VAT up front and then actually never getting paid, and then having to go through an application procedure with the tax bureau to receive that VAT amount as a credit. Okay. So again, think about these two options. Think about how you want to operate in the Chinese market. A lot of it may depend on your Chinese customers' wish and how you want to fulfill that. My belief is you can always say, I'm a startup in China. We need to do it this way. We will review as our business grows with you if we can change the formatting. But until then, we need to keep it as option 2. You have many ways of negotiating this, but I just want to highlight that you have 2 options. Now, as you realize these 2 options, what I also want you to realize from an accounting perspective, the confusion there is between cash and accrual accounting. Now, people use this term cash accounting. I actually don't use that because it's not cash. It's Fapiao accounting. Okay? You are booking into your accounts at the point that you receive a Fapiao and that you issue a Fapiao, because Fapiao is king. You can only confirm a transaction in your books once you've received and issued Fapiaos. The accrual aspect is possible, but I want to highlight that it requires a lot of negotiation with the tax bureau every single month to explain your accruals. Okay. And the downside is, I should probably switch to the other side. And the downside is that a lot of Chinese accountants know the Fapiao accounting because that's what they've been educated on. They've not been necessarily educated on accrual accounting. If they are familiar with accrual accounting, it's because they've worked with a foreign invested firm, foreign invested company who has 2 sets of books. One is Fapiao accounting, which is what you need to generate in China and submit to the authorities. And one is an internal accrual accounting, which shows the true reflection of the business at that moment in time. Because you have to understand that from your suppliers, you will never receive your Fapiaos on time. Very lucky if you do. And when you issue Fapiaos, right, it depends on the option scheme you use, whether you issue the Fapiao upfront before payment or you issue the Fapiao after payment, which is why there's this confusion with cash accounting. It's not cash accounting, it's Fapiao accounting. I'm quiet because I want everyone to digest what I've just said. And if you have questions on that, please type that into the chat box. That is where foreign accountants have a lot of problems analyzing Chinese books. Because if you have not instructed your accounting team in China to do accrual accounting, they won't. They'll do it on Fapiao accounting. And again, Fapiao/accrual accounting is feasible in China. Just know that for your accountant, it's a lot of work with the tax officers. So you just need to be aware of that. It's a lot of back and forth explanations. Okay. So I am highlighting this because that is probably where the biggest confusion lies when analyzing numbers in China, is how things are actually booked. VAT Fapiao compliance and management is key. Okay, we call it the golden system because the tax authorities believe that the Fapiaos are made out of gold. They're not, they're made out of paper, but they believe it is gold. As I mentioned in my introduction, there is a black market for Fapiaos, which means there's a lot of, they're not fake because they're real Fapiaos, but there's a lot of fake transactions that are being made with stolen Fapiaos, basically. Okay. Now, when you are establishing your business, your tax officer may say to you, buy a safe. We want to know who is in control of that safe and make sure the Fapiaos are kept in that safe. Why? Because do people lose things? Of course, human error. There is loss in this world and people tend to lose things if they are not organized and if there's no systematic process being set within the organization. All right. What can ultimately happen, which happened to a client of mine, was when they decided to exit the Chinese market, they went through the liquidation process. Lo and behold, there was a booklet of Fapiaos with 10 remaining sheets that could not be tracked, nor could be found. And as a result, there was a penalty to be paid, which was 10,000 renminbi, the amount per sheet, times 10, 100,000 renminbi in penalty. Now, my client did not want to pay that. They didn't actually have the money to pay that. And as a consequence, they did not complete the liquidation process. And the name of the shareholder was put on a blacklist in Shanghai. So there is true value in these sheets. Okay. Now, over the years, especially since the last amendments were made in 2019 with the new rates, things have been progressing with the tax authorities. Things that have been improving the efficiency. So one of them has been the cancellation process for special VAT invoices, because again, like I said, all of that data needs to be put in there. If you spell the name of your buyer or seller or the address is spelled wrong, the Fapiao is considered invalid. So you've got to really make sure that everything is spick and span. Our tip is, if you're going to cancel a Fapiao for whatever reason, whether it's because there was a mistake in there or values were wrong, whatever it might be, do it in the same month that it was issued. If not, wait till the following month before actually issuing the Fapiao. Once you do it in the same month, the cancellation process is a piece of cake. If you do it in September, you issue it in September and you realize there's a mistake and then it's suddenly October, nightmare to do the cancellation. A lot of explanations have to be made to the tax authorities. There has to be adjustments that are made from the month to month. It's a tedious, very tedious process. Okay. Another advantage that has popped up has been the tax classification for goods and services. So I gave you that table earlier saying, generally for goods, it's at 13%, service is 6%, transport, I believe I wrote also, I want to say 9%, logistics is 9%, real estate is 11%. Now the tax system has actually a classification coding for all goods and services, making it much, much easier to fill in the descriptions onto the invoices. And then obviously, last but not least, something I can't avoid not touching on, although I don't really like to touch on it just yet, is the announcement of e-invoices, e-Fapiaos. Now, this is already happening. So when you go, for example, to a restaurant, restaurants now are doing the test run of issuing e-Fapiaos to you. E-Fapiaos eventually will be wonderful because you're taking away all of this old traditional going to the tax bureau, getting things discussed, canceled, purchasing Fapiaos and all of this out. The issue with e-Fapiaos right now is that you need to have the right software system to be able to issue them. And the software systems, unless you create one that is absolutely specific to you, are not great. So the standardized ones, which are available, there's a standardized one from the tax bureau, and there are a couple of providers out there who also provide standardized Fapiao, e-Fapiao software systems. A lot of mistakes, they're not bulletproof. There's still a lot of mistakes that are being done. So it's not something I would highly recommend to implement today, but I would keep your eyes open as software systems develop and improve, that eventually, even possibly next year, that you start thinking about switching from the paper Fapiaos to e-Fapiaos, meaning everything is generated from the VAT software system together with the external software system that actually produces the Fapiaos that look like that sheet I provided to you. Okay. At the same time as things are being progressed and modernized, there is still disadvantages in regards to the tax bureaus and their investigations, basically. Okay. What I just want to say by this is that, again, if you don't track your Fapiaos, if you're not putting the right content on your Fapiaos, particularly the TIN numbers, which are the taxpayer identification numbers, then this can all lead to you being tax audited. The frequency of tax audits have gone up. I will say during COVID, they went down because that was not a priority for the tax authorities. It still is not really a priority. There's still a lot of COVID surrounding issues that are occurring. But I can imagine starting from next year, it will increase in terms of tax audits occurring. So I want that to be a warning for everybody. Nobody should want to be tax audited. I have been tax audited for a good reason. They did a tax audit because they were wondering why our revenue levels were so high, because it was above industry standard. So that was a positive, but going through an audit and having to spend 8 weeks of answering questions back and forth and showing documentation takes away from your business. I mean, it just meant that my mind frame was not in the business. It was on making sure I survived this tax audit, right? So we want to avoid tax audits because we don't want that impacting the growth and the scale that we want to achieve in China. And if we're small and we don't necessarily have the manpower, somebody will have to handle that audit and relinquish their other duties, which means there's a halt in your growth, very simply, right? So we don't want to go through a tax audit. We also, for whatever reason it might be, whether it's good or bad, ultimately it could impact our reputation if the word gets out that we're being audited. And we don't want that with our customers and suppliers either, right? Because their first thought will be negative and that we're non-compliant. So they may even say, oh, well, you're going through a tax audit. Maybe we don't do business with you. Who knows, right? So we just simply want to avoid it. And I wanted to end today's presentation kind of looking at tax audits. So how can you get tax audited? One is you get reported to the tax authorities, either by somebody working for you, by a customer, by a supplier, by a competitor. The minute that the tax authorities get a report that something fishy may be going on, they must investigate. Okay. And hence they will investigate you. Scenario 2 is red flags within your financial reporting. Red flags might be too many accruals. It might be suspicious transactions, too many sister-related transactions. I went through in the presentation on Tuesday a lot about suspicions. I would definitely go back on that. But any form of red flag could lead to a tax audit. If you're applying for a tax refund, meaning you haven't done properly the issuance of, you haven't been using your VAT software system properly, or you're applying for a profits tax refund or whatever the case is, you know, if you're asking for a refund, it means you're taking money away, tax revenue from your tax bureau. They're not going to be happy about that. So of course they're going to do an audit on you. And then if you're deregistering or liquidating your company in China, then you're also going to go through a tax audit. That's mandatory. But, you know, once you've decided to exit China, you know, going through that tax audit, they're just checking that there's nothing outstanding in relation to your business. Now, in terms of Fapiaos, I want to highlight something that is key in regards to the people you hire on the ground and what system processes or operational guidelines you are implementing to control potential fraud. All right, I'm going to give you a couple of scenarios of what can happen if you don't create system processes and have operational guidelines. One, your staff give you fake Fapiaos. By fake Fapiaos, I mean they are real Fapiaos, but they've been purchased on the black market. So for example, I've had the case where certain Westerners were being given the allowance of putting housing as part of their package. And instead of actually asking their landlords to issue proper Fapiaos, they went on the fake market, purchased fake Fapiaos, black market Fapiaos, which can be tracked. So one of the system processes you should be implementing is checking that all the Fapiaos you receive are authentic and belong to who they should belong to. And you can do that directly on your tax bureau's online system. But in this case, they got fake Fapiaos. They were caught. And as a result of that, they no longer were given housing allowances as an option, and it was removed from their package. Got to be tough in China. Okay, but be wary of getting these types of Fapiaos. If you get Fapiaos and you get an expense list provided by your staff, and the Fapiaos are not matching the nature of what is written in the expense list, that should be a red flag right there, and you should be talking to the employees why it's not matching. If you are finding a trend that your employees are spending, I don't know, 500 RMB in expenses month to month, maybe a little bit of fluctuation, and suddenly in 1 month it's going to 1,500, that's a red flag. Why are suddenly these expenses inflated? Or in a very simple case, if you're giving meal allowances to your employees and you know that a meal costs, I don't know, 50 RMB, 100 RMB, and suddenly you have a Fapiao for 600, why is that happening? If you suddenly have canceled expenses because your staff are realizing that you are doing internal audits on this, that's a red flag as well, because they may be quickly going back and saying, oh no, sorry, this is not an expense, I made a mistake, etc. If you've got expense splits, which basically means that you've got expenses that are being generated in China, expenses that may be generated overseas, make sure there's no inflation that's occurring there. If you substitute Fapiaos for other things, make sure you're controlling that. Fabricated business-related expenses can also happen. For example, customer dinners that never actually happened. or expenses that are not self-initiated, i.e. your wife went to the grocery store, got the Fapiao, and now you're booking that in your company expense. So what I want to show out of these 8 points is that it does happen. Okay, fraud on expenses, fraud on Fapiaos does happen within companies. You need to create system processes and operational guidelines to make sure this does not happen. Okay, we are all in an age of trying to reduce our costs. And costs can be inflated in China by quite a serious percentage, if not controlled. And the fact that currently nobody can travel into China because of the border controls, we've got to be creative in the types of systems we implement and make sure we've got those control systems in place. To finish off today's presentation, we're looking at communication. There is a fear out there by a lot of foreign investors to not be open and truthful with their tax officers. When you establish your company in China, one of the first things you have to do is have a meeting with your designated tax officer. Every company is designated a tax officer in the district, tax bureau in the district. So you have a tax bureau that is in the district where your company is registered, where you have your registered office address. And you're appointed a tax officer in that bureau. You want to be best buddies with this guy. Okay, in order to be best buddies, you need to be open with your communication. It is vital, right? So meet your tax officer, visit the tax bureau. Obviously, you cannot go there right now. You can't be on the ground to do that, but have somebody develop that relationship on your behalf, whether it's somebody in-house or whether it's an external provider. But have that open dialogue and don't have that fear that you've got to hide everything from them. Okay, if you are not open with your tax officer about the transactions that are going to be happening, about the future plans of the company, about the profit repatriation strategies you're going to be developing, about the types of VAT invoices you need to be able to generate, you're not going to have a good relationship, and the tax officer is not going to help you in any shape or form. Now, obviously, our goal is to create a tax optimized structure. Okay. Tax officers are always going to try and earn tax revenue from you. That is their objective. Once you know what their objective is, we have to create an optimized structure where they can say, okay, you've created this bulletproof structure. I can't say no to anything, right? But if you start hiding things and not telling them what you're doing, and then suddenly you want a favor from them, it's not going to happen. And there are two bureaus that should not be messed with. One is the tax bureau, and one is the labor bureau. You don't want to get on their bad sides. So again, you don't want tax audits to occur. You don't want labor audits to occur either, because that can open a whole nother can of worms. You want to make sure that you are transparent in your transactions with them. To do that, you have to be able to communicate with them and speak with them. Now, obviously, the tax officers, a lot of them don't speak English. You will maybe need somebody to represent you, but know what is going on in those discussions. Treat Fapiaos with respect. The golden tax system, that is the name that is being used, is because China sees Fapiaos as gold. And as so should you. What this just means is, as again, you are not on the ground, so you're going to be relying on your staff on the ground to respect the Fapiaos, make sure they don't mishandle them. But how can we limit that from happening? We can create compliance procedures, system processes, operational guidelines, SOPs, whatever you want to call it, to make sure that we know where they're being stored, who is purchasing them, and who is handling them. Okay. And obviously, I've put point 4 here, but having said that, we're all human and humans make errors. But we want to be as precise as possible with the data and information on those invoices so that we don't have to go through the tedious task of canceling them. So as a tip, what we recommend doing is that in the first 15 to 20 days of every month, have a rule saying Fapiaos can be issued during this time frame so that we at least have 8 to 10 days to do any form of cancellation within the same month. In addition to that, when you issue an invoice, issue one sheet, have your customer check it. If everything is all right, then you issue the further sheets. But like that, you then only have to cancel one sheet instead of maybe the 8, 9 sheets you have to issue for that value of business that is being generated. Get things checked, be proactive. It will create a lot more efficiency within your organization. So that is the end of today's presentation. We've hit the 1 hour mark. We've got another 30 minutes left for Q&A if there are any questions that are going to be popping up. I would love to hear what your takeaway was from today. Have you actually learned something? Do you have more clarity and transparency on VAT issues, golden tax system? Let me know. How you can work with me is through a variety of outsourcing solutions, which we call our implementation and growth services. So if you've got any questions on those, you can set up a strategy session with me and we can talk about that. So far, there have been no questions that have popped in. If you guys, the remaining of you who are on, if you do have questions, let me know. Just a reminder, the first 3 sessions of this week's webinar series are already up on our YouTube channel. Today's session will be uploaded by the end of today. And tomorrow we're going to be looking at operating bank accounts. And you can go to woodburnglobal.com/events to register for that. I want to thank everyone for joining me. And as I said, if you've got any questions, let me know. I wish you all a fantastic day. Take care and goodbye.